Welcome to the studio here in Kuala Lumpur. We're talking energy finance in Southeast Asia. Welcome, Vinash.
Well, thank you very much for having me.
What are some of the trends we're seeing in the market at the moment?
I think some of the trends that we are seeing in the market are generally shifting. Basically, we see from the typical PPA financing structure, the typical project finance structure for large-scale projects are sort of shifting towards more small-scale, renewable-driven. And naturally, you still do see some bifurcation of large-scale and small-scale projects. But a lot of times, a lot of the small-scale projects are definitely on the upward trend. And also, you're seeing a lot of balance sheet financing. A lot of people are looking in terms of how to couple and combine some of these different financing trends and basically looking to go to the market. And some of the other options that is being contemplated are primarily at potentially green financing structures typical to a project bond, especially one that you have seen in Malaysia most recently. And then naturally you see some of the broader projects and also some of the challenges and convergence of different technologies that you are seeing and which requires a new sense of financing model.
So, in essence, the energy transition is driving a change in business models.
Definitely. I think this is happening quite significantly, and I think you're seeing this especially in markets where you're seeing a lot of solar uptakes as well as wind uptakes, and most recently you're seeing offshore wind. So naturally you're seeing some of these financing trends are definitely revolutionizing in terms of how the business models are being addressed. And naturally you see from utility scale solar, now you're seeing a lot of CNI opportunities, which are basically small scale. You're talking less than 10, 20 megawatts in some opportunities, and this basically requires some financing innovations in terms of how you best address it.
Which countries are already leading the change?
I think some of the markets that are really leading the change, I would say definitely Malaysia. Malaysia has always been a front runner in a lot of the financing opportunities, especially in terms of bonds, especially Islamic financing, so that they have been a market leader in that front. I think Indonesia is also seeing some opportunities. However, they are still in the learning curve in terms of getting some of those financing opportunities, especially with local banks being informed. Definitely in the Philippines, you're seeing a lot of local bank financing that are looking to emulate some of the previous older structures and now trying to move towards a more newer structure. And basically they have a lot of local financing in terms of local currency availability as well.
In the next 3 to 5 years, what are the major innovations or changes that you foresee?
I think in the next 3 to 5 years, I anticipate that you're going to see a significant amount of organizations that are going to come in and try to innovate some of the different financing opportunities. Simply because you can see there is a shift from coal towards more renewable. You're seeing from thermal, there is a big focus in terms of gas as well. So naturally, some of the, especially on gas projects, these are very large-scale projects which requires a different financing model, especially in terms of the offtake for LNG supply, as well as in terms of combining that together with the gas infrastructure and the power generation. Whereas in renewable, you see this as a standalone, there's an intermittent, and you see a variety of scale. And I think a key element of that is in terms of flexible generation versus variable generation, and that would require a different type of financing because the typical capacity guarantees that is required from the governments are probably going to shift away.
Thank you so much for joining us.
Thank you very much.
Be sure to subscribe to our channels for more industry-related content.